We interrupt your regular programming with an urgent dispatch. The Iraqi dinar, long the subject of speculation and cautious commentary, is at the heart of a major shift in the global currency landscape in 2025. Today, markets are watching with intense focus as recent developments have thrust the dinar into global headlines, signaling both opportunity and uncertainty in equal measure. This is not a routine update. This is a pivotal moment in a currency story years in the making, and we bring you the facts now as they post around the world. First, the confirmed pivot. Early this month, Iraq's highest economic authorities formally approved a revaluation of the Iraqi dinar, fixing the official exchange rate at 1,300 dinars to the US dollar. This move marks a clear break from the long-standing peg that had seen the dinar languish at around 1,450 or worse. It represents the first authoritative recalibration of the dinar's value in years, and its ramifications are already rippling through financial systems. The Central Bank of Iraq and the government have squarely endorsed the change, giving it the force of law and credibility that mere speculation could never achieve. As we speak, economists are recalculating. Import prices for essential goods in Iraq may immediately ease, offering relief to consumers and potentially curbing inflationary pressures. That has already begun to steady markets concerned about cost of living spikes. At the same time, the dinar's enhanced apparent strength may begin to draw cautious foreign investment as international players reassess Iraq as a more predictable financial environment. Capital inflows, if sustained, could support broad reforms and infrastructure projects critical to the country's long-term economic health. But this is only part of the story. Parallel to the confirmed revaluation, speculative chatter has exploded across online forums, trader networks, and financial communities. Headlines touting astronomical revaluation scenarios, some claiming the dinar might appreciate to $3 or even $5 to the dollar, are trending. These claims are wildly divergent from the government-mandated rate and stray into the realm of fantasy, yet they persist, fueled by hope, historical memory of a stronger dinar in the 1980s, and a long-standing investor narrative tied to potential overnight wealth. It is critical to recognize that while the official revaluation to 1,300 dinars per dollar is real and authoritative, the dramatic overnight repricing theories remain speculative and unconfirmed. No credible economic framework or policy analysis supports a jump to multiples of the dollar, and so these claims should be approached with utmost caution. This remains a narrative driven by expectation, not economic fundamentals. Beyond Iraq's borders, the global currency markets are adjusting to what could be the opening of a new chapter. Traders in the Gulf and beyond are recalibrating their FX models, reassessing the dinar's new base value. Commodities markets, especially energy contracts priced in dollars, are watching closely for any indirect consequence, though the dinar's revaluation is expected to have localized impact, not systemic shifts in oil markets. Still, the symbolism of a sovereign currency strengthening underlines Iraq's intention, reclaiming fiscal agency and economic credibility after decades of instability. Within Iraq, the revaluation has also triggered intense internal discussions. Industrial sectors that rely on imports, manufacturing, agriculture, construction, are preparing for lower input costs, while exporters, who earn in dinars, may feel pressure on profitability. The central bank will need to monitor these shifts closely, balancing competitive disadvantage with the broader goal of stabilizing living standards. For everyday citizens, the immediate question remains: will grocery prices fall, or will the benefits be diluted by inflation and administrative delays? That remains to be seen. Simultaneously, the revaluation places pressure on Iraq's financial institutions to adapt. Banks face the near-term task of updating exchange systems, recalibrating loan terms, and reissuing currency in accordance with new valuations. They also must ensure that foreign exchange transactions proceed smoothly to avoid transactional confusion or speculative exploitation. Transparency, speed, and regulatory oversight will dictate whether this transition smooths or stalls. While the new rate offers clarity, it also raises long-term questions about the dinar's trajectory. Will this step mark a one-time correction, or the start of a managed path toward a floating, market-driven value? That depends on continued reforms, diversification beyond oil, institutional strengthening, and political stability. Without those, even a revalued dinar may struggle to gain broader confidence. Notably, Iraq's inflation rate for the first quarter of 2025 remains modest, around 2.2%, offering a constructive backdrop to the revaluation. It suggests conditions where a currency adjustment will not immediately fuel price chaos. The central bank's apparent willingness to allow this revaluation amid moderate inflation signals a considered approach to monetary policy. Meanwhile, the film of caution is thickening. International financial authorities and forex analysts emphasize the need to distinguish between what has been confirmed, 1,300 dinars per dollar, and what continues to float in rumor. This is not a moment to chase headlines of hyperappreciation. For investors, the revaluation presents a renewed basis for analysis, not speculation. It is a time for risk-aware evaluation, not dreams of fortune. Looking ahead, Iraq's economic watchers are now projecting several possible scenarios. In the short term, the market will likely digest the revaluation as a stabilizing influence. Medium term, any positive signal it sends could encourage foreign direct investment, even if modest, in sectors like energy, construction, and logistics. This could foster job growth and infrastructure improvements, especially if tied to transparent governance and anti-corruption efforts. But long-term, the dinar's potential to appreciate further hinges on deep structural change. Real progress requires diversified economic output beyond oil exports, robust banking reforms, and political continuity. International institutions may become more engaged if Iraq can prove that this revaluation is part of a serious reform strategy, rather than a symbolic gesture. That will determine whether the dinar's shift is a footnote or the opening line of a new financial chapter. For our audience watching from abroad, this is your moment to reassess. The Iraqi dinar has taken a credible step forward. Confirmed, government-backed revaluation changes the rules of the game. Yet the towering edifice of speculation built on hopes of astronomical gains remains just that, speculation. Real opportunity lies in observing how Iraq implements this change, how it frames its economic trajectory, and whether the dinar becomes a case study in measured recovery, or a cautionary tale of unfulfilled promise. We close this brief with clarity and urgency. The Iraqi dinar has revalued officially to 1,300 per US dollar. That is the breaking financial news. Everything else, $3 claims, overnight riches, is speculative and remains unverified. Markets are recalibrating. Economists are reassessing. Citizens are watching, and the world awaits whether this revaluation marks the beginning of a true currency renaissance or merely a transaction in bold headlines. This is your breaking financial update on the Iraqi dinar and global currency shifts 2025, where confirmed policy meets fragile optimism and where clarity must triumph over speculation.